Hello, everybody. Welcome to the IC Topic Chats for today. It's July 24th, 2025. I don't know where you are, but I think most everybody present today is dealing with hot humidity. Unless in fact, I even think our people up in the Pacific Northwest are dealing with even more heat and humidity than what maybe I am here in the St. Louis area. I'm super excited to ask back now, I guess, Scott, to talk about co-owning a business. And so I have a lot of interest in this because I co-own a business with my business and life partner who's here today as well. And so let's give it over to Scott. Give yourself an introduction and take over the session. I'm excited to hear what you have to say today, Scott.
Sounds great. Thanks so much for the intro. Yes, I am presenting on the benefits and challenges of co-owning an independent consulting business. As Matt mentioned, my name is Scott Seitz. My business is Lumen Guidance and Consultation. We are a two-person company. It's myself and my practice partner, Katie Hale, who I will talk a little bit more about in just a moment. In terms of goals today, not only do I want to talk about the benefits of co-ownership, but I also know that most of the attendees to IC Topic chats are solo entrepreneurs, or the term that I learned here is solopreneurs. And so I do want to talk a little bit about how solopreneurs can obtain similar benefits to co-ownership that I receive as an actual co-owner. So hopefully it'll be relevant no matter what ownership structure you have. Also, we'll discuss challenges of co-ownership. Matt, Kurt, and I were on the call just a few minutes before we got started and talking about some of those challenges. So there's lots to discuss there, but also some strategies to mitigate those challenges. And then finally, describe some tips and lessons learned that we have um, come across and want to share with others. Our company has existed for about 3.5 years, so we have some things to say. Here's my little disclaimer. Of course, I'm not an attorney or an accountant. I am talking about my own experiences, what I have learned, but please obtain professional support before making business decisions. Want to give a quick history of Lumen before talking more about the co-ownership in general, but just to give you all a sense of where I'm coming from. This is my practice partner on the screen, Katie Hale. We actually met in 2014 at Georgia State University. We were in the same cohort and working with the same research advisor in a dual clinical and community psychology program. Our research advisor was Gabe Coopermink, who some of you may know in the community psychology space. And as we were graduate students in this program, every once in a while we would think about what do we want to do after grad school. And sometimes Katie and I would look at each other and be like, could we start our own firm? And we'd kind of laugh because it seemed just kind of ridiculous at the time. But um, she finished her postdoc 1 year before I did. And when she was finishing up postdoc, she was like, you know what, Scott? I think we could really give this a shot. Let's try it. Let's start our own company. And so in 2022, we established Lumen and been in existence for 3.5 years, have really enjoyed the run, but we were not sure kind of how things would pan out. And we always joked that, hey, if it doesn't work out, we'll go and get real jobs. And fortunately, that hasn't had to happen. Talk a little bit about our process for choosing a business structure. Because early on, we were trying to think about, and of course, we didn't get any training in graduate school about these different business structures. And so we're trying to figure it all out. There is a whole separate IC topic chat on these different business structures. Hopefully, someone can put the link to that topic chat in the chat here. Um, sole proprietorship, partnership, LLC, corporation. We decided that no matter what, whether we go in together for one company or individually, LLC made the most sense for us. We are taxed as an S corp, which is also discussed in that IC Topic Chat video that's online. You can find it on YouTube. Um, what that kind of felt easy for us to decide, but we did spend some time thinking through, like, do we want to be two separate companies, single ownership structure that these companies collaborate a lot together? Or do we really want to go in as co-owners of this company? Obviously, we chose co-ownership. I'm going to talk about a lot of the benefits of co-ownership that informed this decision. But there are certainly challenges and risks, which I will dive into as well. For me, the biggest benefit of co-ownership has been built-in support. I've heard from many solopreneurs that owning your own business can feel quite isolating, can be quite lonely. Um, Obviously, with a co-owner, one that's engaged, you are not alone throughout really every aspect of the business. We do collaborative business planning together. One nice thing is being able to distribute tasks. So if you're like me, there are certainly some tasks each month that need to get done that are not fun. So I'm thinking about reconciling bank accounts, credit card accounts in QuickBooks. We run payroll, things like that. So we actually distribute those. I take half of them, Katie takes half. And the way that we have set this up is every other year we switch with which tasks we are doing. And that way, we both know how to run all the different aspects of the company, but each year we're only having to do half of those, which is a nice benefit. With a co-owner, you always have a ready-to-go consultant, cheerleader, editor, confidant. If we get a new proposal, I'm calling Katie. We're celebrating together. Every year, on our business anniversary in February, we go out to dinner with our families and have a celebration as well. But more even like day to day, week to week, if I'm working on a proposal, I'll send it over to Katie and ask her to review it or get her thoughts on a budget that I'm working on. It's, I guess, compared to solopreneurship, nice just to have that person that you know is invested similarly as you and really have each other's backs. You also get to share and navigate risks together, including financial risks, including even some aspects of this kind of work that we might not think about risks, but the time and energy that we spend working on an RFP, let's say, there's some risk in there. You might not get a return on the investment of that time and energy, but we get to share that. She might be working on one proposal, I'm working on another, etc. If you've been in the independent consulting line of work, you know that there are periods based on project schedules that are much busier and some periods that are lighter in terms of workload. It's nice having a co-owner when if I'm really busy, Katie might be in a slower period and she can help lighten the load. Um, some projects we work 100% collaboratively on. Some are pretty much completely separate, and we work on them just as individuals. Of course, they're still part of the business, but in terms of the work that we're doing. So being able to spread out workload has been nice. And sometimes I even think we're able to take on some additional projects, knowing that we will be able to spread out that workload between both of us and taking on more projects than maybe we could if we were kind of on our own in separate companies. Also, increased accountability. As I mentioned before, there's those tasks that none of us really want to complete each month. But Katie and I meet once a week, and about once a month, we're checking in on those monthly tasks to see how are they going, and just having that, knowing that one other person, your business owner, is going to be checking in with you. gives you a little bit more motivation to stay on top of things. Another category of benefits relates to business development. Um, because Katie and I are co-owners of the same company, our professional networks that we can tap into are much larger than if it was just either of us individually. Um, we both are in Atlanta, but we've had pretty different Atlanta experiences. Katie was born and raised here, went to the University of Georgia, worked in the legal field for a while. I was born and raised in Tampa, came to Atlanta in 2005, went to Emory, a different college, did Teach for America. So we have separate networks that we can tap into for business development. Um, we also can split up the responsibilities for marketing and therefore have a broader marketing reach. If you've come to a lot of IC topic chats, you might think that Katie is a very disengaged co-owner because you probably have never seen her. I don't think she's ever come to IC Topic Chats, although she might have come a little bit before I started coming. But that's been intentional. We looked at different opportunities to connect with other evaluators, to connect with potential clients, and we split those up. So IC Topic Chats, something that I go to for professional development, but also to build and maintain connections with other evaluators. Katie has other activities that she engages in for marketing, um, which has been nice. You know, it's both of us doing the work, but maybe if we were our own company, feeling like we'd have to do it all, but we can split it up. Um, because both of us are contributing to the business, in a way, a lot of the business costs are shared. Um, business license fees that take place every year, accounting and legal fees. We have one accountant who does one business tax return at the end of the year, so that's less expensive than if we had, an accountant doing two separate business tax returns at the end of the year. Website marketing costs, they're paid for by the business. We're both contributing. This isn't as big of a deal now that our company is more established and successful, but especially early on when we were building up our client base, that being able to share the costs, like even of hiring an attorney early on to help us get things started, that was nice to not have to go in take care of all those costs myself. Those for me are the main benefits that I've noticed. Once we get to the chat portion today, I'd be curious to hear if other people can identify other benefits. But I did want to take a moment to talk about how solopreneurs can obtain similar benefits. You know, most of what I just described has nothing to do with the legal agreement between Katie and I. For instance, that built-in support. This is something that, with some intention, any independent business owner could really obtain those same benefits by partnering with another business owner. Probably not in any kind of legal way, but if there's a shared agreement of, hey, let's meet once every other week, talk about our business, hold each other accountable for some tasks that we know we don't want to do, talk about business development, brainstorm ideas together. Um, when we have a proposal we're working on, let's be our go-tos for reviewing each other's work. Let's be our go-tos to help think through a problem. And in that way, you'll get what I think is one of the main benefits of co-ownership, but without many of the challenges that I'll be talking about in just a moment. In terms of business development, ways that solopreneurs can obtain similar benefits, I talked about how Katie and I are able to have like a broader marketing reach. We have larger professional network to tap into. In IC topic chats, we've discussed the concept of a niche and its utility. Um, I think this is another way where you can partner with other colleagues. And if you have a specific niche that's different from another colleague, um, if you all come to some shared agreement that you're going to cross refer with that colleague, based on their niche. In a way, you really are expanding your network, again, without having to be co-owners. And last year, I want to say there are some opportunities to share costs with other business owners, even if you're not co-owners. This is maybe more limited, but something as simple as like if you and another business owner say, hey, once a year, let's meet with an accountant together, pay the hourly rate, we'll split the hourly rate, but we'll come together and we'll talk about what shared questions we have. We might have some individual questions to add as well. Um, but you might learn something having that other business partner there, and you can share the cost of that 1 hour for the accountant. Again, it might not be as relevant for an established company, but definitely when you're starting up, that can be a nice way to keep costs lower. So I've talked a lot about benefits of co-ownership. It is not all rainbows and butterflies. There are plenty of challenges that I want to dive into now. The main challenge is, or I guess maybe the most common challenge that is thought of, is what if conflict arises? You have two human beings working together on a shared goal. There's going to be conflict. Um, in terms of mitigation strategies, I think the most important uh, strategy is a prevention-based strategy here. I'm a community psychologist. I'm always thinking about prevention. Um, I think choosing the right person to go into co-ownership with is key. You really want to make sure that this person has shared values when it comes to conflict, resolving conflict, as well as business and personal goals. If Katie wanted to grow Lumen into a 30 plus person company and I wanted to keep it as a two co-owner firm, that's going to be really difficult to navigate together. We've got very different visions of the company. So really doing your due diligence ahead of time to make sure that this person is going to be a good fit. I often say that the best business decision that I've made is partnering with Katie. Um, but I also know that things can change in terms of our business personal goals. And I'll talk on the next slide a little bit about how we thought about managing that. Another thing that we've really found helpful is having an openness and genuine concern for each other's ideas and interests. Katie and I joke that we are more concerned about each other's best interests than we are of our own. Um, of course, we need to have some balance there, but it's been helpful for us to genuinely want to hear what the other person's thinking about, concerned about how can we make this work. Before starting the company, we hired a business attorney to help us create a business operating agreement. And in that operating agreement, we added how are we going to handle disagreements? And we wrote it down, put it in this legal document. Um, I'll share on the next slide one of those agreements of how we'll handle conflict. But this is something that's been nice to know that, hey, we've thought through this. We've got it on paper. We've got a game plan if some major conflict arises. Finally, I'll say in terms of managing conflict, we have really benefited from regular check-ins with each other that were focused specifically on honest communication about the business and how it's going. During our first year, it was probably about once a month that we were meeting specifically about this. How are you feeling about the business? How is this going? Do we need to make any changes? One of my mentors told me that as soon as there's any issue, concern with the business, bring it up to your co-owner. And we've really taken that to heart, and it's been really helpful for us. Um, if we don't bring up these issues, they're going to fester and become bigger than they need to be. Speaking of conflict, the question then becomes like, what if one co-owner wants to leave the business? We have some conflict that we really can't get through. Someone wants to leave either because of the conflict or another reason. Um, we were pleasantly surprised when we met with our business attorney. And I guess it makes sense in retrospect. But he had like three common options that co-owners fall back on when one person wants to leave the company. And our business attorney described these options to us, and then we were able to choose which option we wanted to formalize in our business operating agreement. I pulled this directly from our business operating agreement, and it's directly addressing what happens if one of us wants to leave. It says if at any time the members don't agree on some major decision, either member, so Katie or I, can make an offer to buy 100% of the interests of the other member. I didn't add some of the details below just because it's very text heavy, but I'll share that um, one stipulation here is, let's say I want to leave the company and I say, Katie, I will buy your shares of this company for $50,000. Katie has two options. She can either sell me the shares, her shares for $50,000, or she can buy my shares for $50,000. And it's up to her. But what that helps ensure is that I'm actually making a fair offer on her shares if I invoke this Article 6.4. So, of course, this is worst case scenario if we're not able to work through some conflict or split ways cordially. But it's nice to know that we've got this fallback. Another challenge to co-ownership that we didn't know about beforehand is to be officially designated as a minority-owned business. One or more co-owners who are from a recognized minority group must own at least 51% of the company. So Katie's a woman. She owns 50% of our company. So we cannot be classified as a woman-owned company. Um, Again, we learned about this after the fact. It would have been nice to have that designation. Um, so if that designation is important to you, consider co-ownership percentages of 51% or more. There's some challenges that come along with that. So co-ownership might not be um, the route for you if this is something that's important. Now, it doesn't have to be the same person. So if two women are co-owning a business, more than 51% of the shares are owned by women, so then that would be fine, but something to keep in mind. I believe maybe one or two more challenges. Um, if you are an S corp or an LLC taxed as an S corp, and potentially other business structures, I'm not sure. The company profits must be split based on ownership percentages. So this doesn't include payroll, but after all of our expenses, including payroll, our net profits between Katie and I must be shared 50-50. This can present problems if one of us is working much more than the other, or if one of us is bringing in much more business than the other. There are some ways to work with an accountant to come up with strategies to compensate each co-owner in different ways. For instance, payroll is one way that does not have to be split 50-50 between the co-owners. So there is that as a strategy to help compensate the co-owner based on whatever is important to you all, whether it's the number of hours you're working, how much business you're bringing in, etc. I will share what we do at Lumen to help address this issue. So we track all of our hours, even though most of our contracts are not paid hourly. So this is a potential con to someone who does not want to track their hours if you use this approach. But we track all hours, and we pay ourselves based on the hours that we've worked, according to an hourly rate that depends on the project that we're working on. Um, and this is like a IRS legal technical thing, but what we pay ourselves must be reasonable compensation. So it must be, something that or an amount that is reasonable for the type of work that we're doing. So we've come up with per project what we feel like is the reasonable compensation. Um, and so if I work 20 more hours in a given month than Katie, I am paid more through payroll. Now we still keep a good chunk of what comes in the business account, and it doesn't go through payroll. It covers business expenses, and then those net profits are distributed 50/50 through distributions. Um, One thing to keep in mind, of course, is distributions, so the net profits and payroll compensation are taxed differently. Payroll includes like Social Security, Medicare, unemployment taxes, I believe, whereas distributions of the net profit, you don't pay those taxes. So it's definitely something to think through because if you just do all of your compensation through payroll, maybe you're paying more taxes than you need to. Um, so keep that in mind. Last, want to just talk about a few tips and lessons learned. I mentioned this early on that the right fit in terms of your business co-owner is so critical. Um, I put this image of people with their fingers crossed on the slide because even if you do all of the due diligence ahead of time, you and your co-owner have similar goals, similar values. You feel the same way about money, how you are going to pay yourselves through payroll and then distributions. Are those going to be quarterly, monthly, etc.? What are your work styles? Does one person procrastinate? The other person doesn't. Let's say you've worked through all of that and you're good. You start your company together. Well, we're human beings and we change. And so there is an element of, fingers crossed. Hopefully this continues to work out really well. It has for Katie and I um, so far, and it seems like it will continue to, but it's definitely something to keep in mind that um, things can change and you have to be willing to accept that level of risk. Um, we have found it really helpful to have a living business plan that we update. Now we update it once a year. But it's also an opportunity to check in with each other. Are we on the same page still about how we want this business to run? If you are someone who feels like you know exactly what you want out of your business, not really open to any other ideas, like co-ownership is probably not for you. Um, but if you're willing to really partner with someone to think through what might work best for both of you with all the risks that come with it, it might be a good plan. And again, just the regular check-ins have been key for Katie and I, bringing up concerns as soon as they arise so we can address them on the spot. So that is the presentation I wanted to share today. Feel free to reach out to me with any questions, or if you want to continue the conversation, I'd be happy to chat more. That QR code goes to my website, and there is my contact information. And I'm excited to hear your thoughts on these topics in the chat.
I have a couple quick questions before I stop the recording, Scott.
Okay.
So, I have my own opinions about this because my co-owner and I have our own special relationship. But how
Nice.
frequently, obviously, how frequently do you meet to kind of talk business? Now, I know for an S corp, usually you need to have minimally like one annual shareholder meeting and directors meeting and all that sort of thing. But I suspect you're meeting more frequently. So, do you schedule it? Do you have an agenda? How do you go about doing that? I'm just curious from your perspective.
Yes. The plan that we have works for us. We meet once a week. Every Monday at 10 a.m., Katie and I are meeting. And we have a shared Google Doc where during the week we add things to our shared agenda. And then we also have a list at the bottom that's on every agenda and it's like ongoing things to check in on. And so during the week, like for instance, I got an email from our payroll company, I think yesterday saying like payroll, like look out for that. So I just delete that email, add to our agenda payroll plan just to make sure we discuss it. But that is when we are also checking in on the business development pieces. It's one of our ongoing agenda items. It's weekly, so most weeks there's nothing really to add. Um, we try to once a month meet in person for a little bit longer just to, have a more formal check-in, but also just to build our relationship, and maintain our relationship just as friends as well. And then once a year, it's in January, we schedule a longer, like full out business development meeting to make sure we're on the same page.
Thanks for that. Have you considered selling her 1% of the business to give it a female-owned business? And just, I don't know what the 1% would account for, but do you think that that would be in your best interest to do that? But on the other end, if things ever come down to it, I'm just playing out this scenario. She can always overrule you in that situation too. So I don't know if you've gone through those mental gymnastics on that.
Yes. We having that like woman-owned business would be like really nice and important to Katie, and I would like to be supporting a biz or a woman-owned business and a part of it. Um, but we haven't felt that not having that designation is having like a significant impact on the business in terms of revenue, clients, etc. Um, if we felt like it might, we have talked about selling shares to each other to accommodate, for instance, like if one of us knows we're going to have a year where we have to work a lot less, we've thought about, hey, do we sell some shares so that those net profits are distributed differently? We haven't talked with our accountant or attorney about that yet. And so I don't even know if that's legal, appropriate, whatnot, but we've thought about that as being a potential. If I do sell 1% of my shares to Katie, so she's 51%, every time we take distributions, she's getting a little bit more than I am. It wouldn't be much. So yeah, it's a good point. There's an option there too.
Yeah, it's an interesting thing from my perspective. Our percentages don't really matter. We do the distributions by the percentages because that's what you're supposed to do, but it all goes into the same bank account because I'm in a personal relationship with my business partner. Um,
Yes.
I'm gonna cut this off in a second. I'm gonna stop the recording in just a second, but I want to point out I got a text from Lauren McLean. She said, "I'm sad to be missing this session on partnerships. Angelica and I are at a conference, and she and her very good friend Angelica are in your same situation. They're not in a personal relationship; they're in a professional relationship. Please remind people that if they have questions about partnerships, I'm happy to chat with them about it. She has well, anybody knows Lauren, she has strong opinions, but she has strong opinions about it, and that could be helpful for people to think about. So, just as another reference, if you're interested in reaching out to someone, Scott's obviously here to talk about it, and I'm sure would be available afterwards, but also Lauren and or Angelica could be good people to talk to as well. All right. Well, I'm going to stop the recording and say goodbye to everybody out in YouTube land. Everybody else who's live, stick around and don't start talking right away because I'm also going to stop the AI companion.